Fannie Mae released an update to their selling guide on January 29th, which now allows lenders incentives up to $2,000 for borrowers. This HARP program update will now make HARP loans even more affordable for underwater borrowers who choose to refinance. As a way to encourage more borrowers to come forward and refinance through HARP, the Home Affordable Refinance Program, Fannie Mae, announced that lenders will be allowed to offer a refinancing incentive that can be used in several ways. Lenders will also be permitted to offer additional incentives to borrowers for all transaction types. For HARP refinances, the lender may provide an incentive to the borrower in the form of a payment to pay off a portion of the mortgage being refinanced, as long as the amount of the incentive is not more than $2,000. No repayment is required, and the payment is reflected on the HUD-1 settlement statement as a lender credit. Since the lender is not considered an interested party contribution, IPC, the incentive is not considered cash out to the borrower and does not have to be included in the cash back to borrower at closing calculation. The lender may give the borrower a cash or cash-like, such as a gift card, incentive that is not reflected on the HUD-1 as long as the amount of incentive does not exceed $500 and no repayment is required. Again, these types of incentives are not considered interested party contributions. According to the Fannie Mae announcement, lenders may implement these policies immediately. Some lenders have their own incentive policies in place and may deliver loans with lender incentives that exceed the limits of this announcement if the applications are dated before May 1st, 2013. This is a positive move for the HARP program and a way to get more borrowers to refinance through the program now that incentives can be used to pay closing costs. Other changes to the HARP program became effective January 1st, 2013, making HARP refinances even more accessible to homeowners. In September of 2012, the Federal Housing Finance Agency, FHFA, announced a new representation and warranty framework for all Fannie Mae and Freddie Mac loans, including the HARP loan, which became effective January 1st, 2013. This new framework is designed to lessen a lender's burden when a loan defaults. This new framework does not cover loans that were sold to the two GSEs prior to January 1st, 2013. Under the new representation and warranty framework, HARP loans are eligible after an acceptable payment history of only 12 months from the date of Fannie Mae or Freddie Mac purchase. With this new framework, Fannie Mae and Freddie Mac will also be conducting quality control examinations, generally between 30 and 120 days. This process will not affect HARP 2.0 mortgage rates. It is expected these new rules will greatly improve the quality control procedures earlier in the loan process, while at the same time clarifies the repurchase burden that the lender faces. With these changes, easing lender liability may in fact increase credit availability. The HARP Streamline refinance programs available were created to help borrowers who are current on their loans move to a more stable loan product or shorten their loan term in order to rebuild equity at a faster pace. Some lenders did not want to handle HARP loans with high loan to values above 125% due to risk. By reducing the buyback time frame to 12 months and improving quality control, it is hoped that more lenders will participate in the HARP program so that the many homeowners who have been turned away for high LTVs will now be able to refinance. These changes to HARP are expected to enhance transparency for lenders and other mortgage industry participants, improve business efficiencies, and provide borrowers with more access to mortgage financing.